Okay, good morning everybody. Welcome to our online event focused on the future of the high street. In a moment, my colleagues are going to set out how high streets and city centres across the country were performing before the lockdown, how they are faring during the lockdown, what they might tell us about their future, and indeed the policy choices that lie ahead of us when we think about how we bring our city centres and high streets back from where they currently are. The event is being recorded and will be made available after the event along with the slides. During the event, for those new to Zoom, we recommend that you select speaker view for the best experience and keep your mics on mute unless you're asked to ask a question or to make a point. And the hashtag for the event is COVID High Streets. After the presentations, which will last around 20 minutes or so, we'll then move into a question and answer session for 30 to 35 minutes. If you have a question, you can submit it via the chat function by sending a private message to ask a question. You can do this during the presentations. You don't have to wait until the end, and we'll try and get through as many as we possibly can. So if something occurs to you while my colleagues are speaking, then just pop it on the ask a question chat and we'll try and get to it. And we'll look to finish around 12 o'clock. So that's how we're going to run the session. Let's move on to the presentations. My first presenter is my colleague Lahari Ramuni. She's a researcher at the Centre for Cities and leads on all of our high streets and city centres work. Lahari, over to you.
Thanks, Andrew. Right. Okay, let's dive straight in. I'm going to speak for the first half of the session, so I'll talk about the data and the evidence that we have around high street, and Paul will pick up on what that means for policy and what that should look like going ahead. So first off, what's the context for this conversation? So high street style businesses have been struggling for a very long time now, to the extent that when we hear news now about retail chains or restaurant chains shutting down, it's no longer a surprise. And the lockdown has really not helped this situation. So from our own analysis and analysis by others, we know that high street style businesses like non-essential retail and hospitality and leisure have been hit very hard by the lockdown. And we've seen this come through in terms of evidence, in terms of news flow as well. So Oasis and Warehouse, the clothing chains have already announced that they're going to be going into administration, and restaurant chain Carluccio's have said that they're not going to be opening most of their stores back after the lockdown. So what does this mean? What does this mean for the future of the high street, and how do we try and understand it? Well, a good place to start is understanding the relationship between high streets and offices before the lockdown. Spoiler alert, there's a strong link between places that have strong office spaces and also have good high streets. And then I'm going to look at the change in behavior during the lockdown, so what's happened and how have people behaved, and then we'll go on to talk about policy. So first off, when we talk about how places were before the how the high street was before the lockdown, there's two distinctions that we need to bear in mind. So the first one is the high street is changing, but not all places were struggling with this change. So this chart here, you've got all of our cities mapped out, and it shows the vacancy rates. The lighter yellow color is where vacancy rates were low, and the darker green, going towards the green, is where vacancy rates were high. And what we see is that some places like Exeter and Brighton had fairly low vacancy rates, around 8% and lower. And then when we look at the other extremes, like Hull and Wigan and Newport, their vacancy rates were higher than 20%. So that's fair. That's the first point. And then the second thing we need to bear in mind when we think about this is that there's a lot more to high streets and city centres than retail and leisure. So this chart here looks at the floor space and how the floor space is used across the city centre, broken down by usage across city centres all over the country. So what we see is that things that we talk about a lot fairly often, like retail, takes up about 26% of the floor space, shown in the dark green in the pie chart. And then Next comes food and leisure, which we also talk about a lot when we talk about high streets, and it takes up about 6% of the floor space. But actually, an often ignored element is the offices, and we see that exactly half of the space in city centres is actually taken up by offices. And this is quite important to understanding why some high streets are successful and some are not. So in terms of the floor space usage, we can think of the two different kinds of users as two different parts of the economy. So on one hand, you've got retail and food and leisure. That's the local services element of the local economy. And that's more to do, that's, businesses that sell to their local environment. So you might be selling to people that are a few miles around you and maybe a little bit further on, but it's things like restaurants and it's things like bars and hair salons, and they're very much selling to their immediate environment. And they're the businesses where the money that's already in the city and the city center gets spent. And then on the other hand, we've got offices, which represent the exporting element of a city center. And when I say exporting, I mean not necessarily abroad, but also like to other cities and to other regions and maybe other countries. So that can be an creative industry procuring service, selling their branding services to a financial services firm in Manchester, or it can be an accounting firm in Manchester selling their services to a law firm in Leeds, for example. And that's how money gets brought into the city and into the city centre. So there's quite an interesting relationship between both of these. And what we also know is that the quality and the quantity of offices and office jobs is not spread evenly across the country. So the next chart here looks at exactly that. So there's a little bit going on here, so I'm going to start off slow. And on the x-axis, we've got the share of city centre jobs that are businesses. So that tells us what is the concentration of the exporting jobs that bring money into the city centre as a share of all the jobs in the city. So it's a good way of thinking about it as the quantity of exporting jobs in the city centre. And then on the y-axis, we've got share of city centre jobs that are in exporting industries, but they're high skilled. So these are more towards the higher end of the pay scale as well, or they tend to be in most cases, and they are a proxy for quality of the office jobs in that city centre. So splitting this off into quadrants based on where the averages lie, we see the grey square, a grey rectangle at the top right-hand corner, which is our strong city centres. So they have both a good quantity and a good quality of the exporting jobs. So, and this is places like London, Bristol, and Oxford. And then on the left-hand side, we've got the other grey rectangle, which is the weak city centres. So places like Blackpool, Doncaster, and Mansfield, and they tend to have a lower share of both the exporting jobs and a low quality of those as well. And where this gets really interesting is when we add information that we saw earlier about the vacancy rates to this chart, and how we've done that is by putting it into the bubble size. So next chart here, the x-axis is exactly the same as before, the y-axis is exactly the same as before, but the bubble sizes have changed for each city. And what that represents is the vacancy rates in each of those city centres. So the bigger the bubble, the more shops that are empty. The smaller the bubble, the fewer shops are empty. And what we see, interestingly, is the strong city centres, so the places that have lots of office jobs and good quality office jobs, the bubbles are smaller and the vacancy rates are lower. And on the other corner, we've got the bigger bubbles with weak city centres, and they've got more shops empty and also fewer jobs and fewer lower paid, and in the lower paid segment of the market. And when we think about it, it kind of makes sense, because offices pull in thousands and thousands of people into a city centre on a day-to-day basis, and these people go into cafes during lunch, they might go into the shops after work, or they might go to the pub. But what it means is that the businesses in these city centres don't have to rely on the weekend trade as much as places where the offices isn't as strong an element of the local high street economy. But this was all before the lockdown happened. And this is how the relationships played out. So what about the lockdown? How has it played out across the country geographically? So there's some elements that have played out similarly everywhere, or they're blind to geography. One of those is that online shopping has started accelerating. Recent ONS figures have shown that people are shopping online a lot more and a lot faster, or like switching a lot faster than they used to before. And government support has been available everywhere. So a job retention scheme, business rates relief, it's not discriminated based on geography. So businesses anywhere can apply to it. So these things might play out differently. That's not something we know yet. But as far as we are now, they're acting the same everywhere. But that's not true for everything. And there's some things that we know are happening differently in different city centers. So to understand that, what we did was look at footfall across different city centers. And how we've done that is by using mobile phone data to understand how workers are behaving, or they were behaving, towards the end of March. And this is actually something that we're going to start doing coming in June and through to the end of the year, just so that we can track how cities and city centers are recovering through and after the lockdown. So the bubbles here, again, this chart here, it's the same structure as before. The x-axis is the quantity of exporting jobs. The y-axis is the quality of the exporting jobs. And the bubble size this time means something different. The bubble size this time is how it gives us a representation of how much worker behavior has changed in these city centers. So we've looked at how many people stopped coming into the city center after the lockdown was announced. So the bigger the bubble in this instance, the more people's behaviors changed and they stopped coming into the city center. And the smaller the bubble, few people shifted their behavior. And in a weird twist of fate, we see that actually it's the strong city centers this time that have experienced more of a drop off because of workers not coming in, compared to the weak city centers. And this isn't necessarily to do with how people have responded or attitudes to in different cities. It's more to do with the kind of jobs that are in these cities. So where you've got lots of office jobs, it's, as we know, it's easier to switch to working from home, or it's easier to make that switch faster and a bit more consistently. So it makes sense that strong cities have seen a bit more of a drop-off in terms of worker footfall than weak city centers have, irrespective of what the attitudes may have been in those places. But what does that mean for, ending lockdown, recovery, and going ahead? Well, it means that strong city centers and weak cities are going to be acting and responding differently. So what we've seen for strong city centers is the drop in footfall has been bigger. But another thing that's likely to happen is that it's likely to go on for longer. We've seen in recent guidance that office jobs are most likely the last to be going back to the new normal, whatever the new normal is going to look like. But when we do as we travel back to this new normal, demand will eventually pick up in these city centers for the local services. So like cafes and pubs and shops, as people go back into the city center for work, it might be a bit of a slow process, but people will start going back in. So in that sense, the lockdown is more of an interruption for the businesses, the local services businesses like the salons or the cafes that operate in this area, than anything else. And if the government should wish to do something about it, the role for them to play there is making sure that these businesses tide over and they're able to cope with the cash flow difficulties that they have during this time, and that they survive to whenever the demand picks back up in the future. That's the strong city centers. But for the weak city centers, the story is a little bit different. So for the time being, they've seen smaller drop in footfall from what they used to be before. But it's not that, but that's only part of the story. For the weaker city centres, the lockdown is not just an interruption of the business, it's also an acceleration of the long-term decline that was already happening, especially with more people shifting to online shopping. And that means that whatever government intervention is put in place, it can stagger the decline and it can stagger closures, but it can't fix the lack of structural demand in these places for these local services. And it's important to protect the jobs in these places or the businesses to a certain extent, but we must also bear in mind that there's a trade-off in doing that, in that these people or the resources cannot be employed in otherwise productive uses at the same time. So there's a balance to be struck as well. But overall, the long-term approach in these places needs to be more to invest in them, to transform them into more attractive business locations. And that's how you can create and sustain the long-term demand for these local services in these places, by having more office space, more workers coming in, so that they can they can survive and also thrive. That's it from me, and then Paul will now talk about what the policy response should look like as well. Thank you. Over to you, Paul.
Lovely, thanks Lahari, and good morning everybody. So what does this then mean from a policy perspective? Well, the first thing to say is that everything I'll say after this is couched in the fact that we think that the enduring appeal of cities, both in terms of places to work but also places to come and spend leisure time, will continue after the crisis. It may not get back to 100% straight away, but we think it will approach 100% again at some point in the future. Happy to debate that in the questions, but put that as our big assumption to start off with. Then the question is, what does that then mean from a policy perspective in terms of short-term and long-term? So in terms of short-term, as Lahari said, it might be that even in places that have got quite strong city centres, and therefore quite a lot of demand for retail and cafes and restaurants, getting people out of their houses back onto the high street may be a slow process. So that raises questions about what the government should do about that. Is that a short-term cut in VAT potentially, or is it about creating vouchers that people can go and spend locally that are given to every household in particular areas? Again, that might be a time-limited intervention, but you could see it, something like that, where, say, somebody gets 50% off by going to shop in their local high street for the next 3 weeks, or they get a charge card with some money on it that they can spend only in their local area. But of course, that only really has an impact, I think, in terms of getting, trying to sort of prop up the economy and getting people back out again. But there could be some much bigger, longer-term interventions that are required in some places, given what Lahari has just presented. So again, those places that have lots of office jobs in them, pulling in many tens of thousands of workers every day, that creates footfall for the high streets, and high streets in these places do very, very well. But in other places, that's not the case. So the policy intervention is going to have to be thinking around, how does it do something fundamentally, trying to get more jobs into the city centre, make them more attractive places to do business, which will then have a knock-on impact on the high street. So what do we think we should be doing about that in the longer term? Well, 2 policy suggestions on that. The first is to create a city centre productivity fund. Now, many of you will probably remember that the government has announced many times over the existence of a national productivity infrastructure fund, which is meant to be of many billions of pounds. It gets bigger every time it got announced. What we say is that £5 billion from that should be taken to create the city centre productivity fund, with the explicit goal of trying to make city centres more attractive places to do business. And that would be then interventions around, say, office space, public realm, and other types of interventions, which tries to get some of these higher skilled businesses into them, pulling workers in, which boosts the productivity of the city, which we're principally interested in, but then have the knock-on impact on the high street as a result. How that process would work would be that local authorities would make a bid into central government, very clear, structured plan about what it is that they want to do with the money that they want. Government approves that or not, and then crucially it gives the money to local authorities to go off and spend that as they see fit, according to the plan that they've set out, with the crucial element being that any intervention that is made is done explicitly with the fact that it's about trying to make a city centre a more attractive place to do business. So it's not just about retail or cafes, it's about doing business, particularly from an office perspective. And the government lets local authorities get on with that. The second intervention that could be made is around property. Now, we're told from a number of conversations that we've had around the country that one of the big issues that city centres have seen in terms of trying to adapt to the trends that they've seen over the last 10 years is that landlords are refusing to write down the debt that they hold on properties. So what that means is that they advertise properties as higher rents, or in terms of trying to sell that property on, they have a particular value that they set at, because if they actually reduce the value of that down to the value of probably where it needs to be, they have to write down that loss on their balance sheets, and that then causes them all sorts of issues. And to have these inflated values for properties in city centres that are then not being used and not being moved on, which is really hindering that change. So what we suggest from this potentially, and it'd be good to discuss this more in the questions, is that the government could set up a property fund, and it moves in and buys up property as landlords potentially start to breach their covenants as we go through this crisis, and gathers all of this property up, once and for all, trying to deal with an issue that has hampered high streets, since the last recession. This has got roots back in the last recession and has pulled through. Now we have an opportunity potentially to correct this once and for all. So government will move in, buy that property, either directly from the landlords at reduced rate, or potentially from the banks as they've then taken that property in, and then would then give that back to local authorities to use, either to knock down, to repurpose into a different use, like housing, for example, or to actually refurb it and bring it up to standard. So actually, we're then creating office space that businesses want to move into. But crucially, I think if we were to do this, local authorities would have to have a very clear exit strategy about what they were trying to do with this. It's not a case of let's just get property and earn money from it for the future. It's about using it as a regeneration tool, trying to make their city centres more attractive places to do business, and then moving that property on once hopefully we have achieved what we want to achieve. It'd be great to discuss that more. Over to you, Andrew.
Great, thank you very much, Paul, and indeed Lahari, giving us an outline of where we were. I think lots of things in there. We've getting loads of questions coming in already, partly about clarification on the data, and then many questions in relation to the policy choices. I mean, the obvious point when we're thinking about our high streets and city centres is firstly context matters. How you went into the lockdown period will tell us something about how you experience it, but more importantly, how you come out. Secondly, that when we think about high streets and city centres, the factors that are driving success or underperformance are definitely more than retail. In a sense, retail is often the symptom rather than the cause of underlying weaknesses. And then the third thing, I think, which is really important from a policy point of view, is trying to understand and distinguish between short-term impacts and longer-term impacts. And that, I think, will have big implications for the policy choices that we make, and indeed the timings of those policy choices. And you can see this playing out in a whole bunch of different ways in relation to national programs around job retention. When should they change? How should they change? Who should they change for, and such. And I think this is the high streets is a similar set of scenarios. So what we'll do, we'll move into the question and answer. We're going to take one question at a time. I think that works better in this format. In a moment, I'm going to ask the first person who's going to ask a question to unmute themselves, open up their mic, make their question, and then we will move on, and I'll get responses from Paul. When you've made your question, put your point across, then just mute yourself again, and we'll kind of get through as many as we possibly can. So just in a second, the first question I'm going to take is from Beverly Connolly, and Beverly wants to ask a question about medium-sized towns. So I think, Lahari, and I come to you, that will be about just reminding people about the spread of the places that we are doing the analysis on. But Beverly, if you were there, if you can unmute and then ask your question, that would be great.
I've unmuted. Thank you very much. I represent Tandridge District Council, which is a small authority in East Surrey, and I was pleased to see from your charts that our local City Crawley is seen to be strong, so that's really positive. But we have potential investment of £50 million into one of our larger towns, Caterham, and I saw Paul's comments also about reinvesting in towns and getting more office space. So we've got £50 million of investment from a pension company in our shopping centre, and also potentially our council has already been investing in an office block. We bought that recently, and we're looking to refurbish that. So I've got sort of like two questions. One to Paul is that, are you suggesting that government should be funding us to refurb that, because that would be fabulous? But also, we're getting a lot of resistance though from people in the town who don't want the town to change, which it must change in order to grow and to develop. And how would you suggest, and so there's lots of objections to the planning. What sort of tools can we use to just persuade people that this is the way forward? We need that investment and we need that development. It's really difficult at the moment because so many people are opposed to it. Thank you.
Excellent. Thank you very much, Beverly. Good questions. Lahari, I'm going to come to you for a second. Just as preamble to that, just remind people of the spread of places that we are looking at when we talk about city centres and town centres and high streets. Just give people that kind of spread, so people have in their mind what it is that we're talking about.
Yeah, of course. All our research focuses on our 63 PUAs across the UK. So that is places that have upwards of workday population of 125,000. So it includes, on the smaller end of the scale, places like Worthing and maybe Crawley as well. But on the bigger end, obviously, places like Manchester and London and Birmingham. Yeah, so that's the remit of our study, and in terms of where we look at city centres, it's based on the size of the city. So London we've classified London having a much bigger city centre than, say, again, Worthing or even Manchester, Birmingham and Sheffield, for instance.
Okay, Paul, do you want to pick up the other points that Beverly makes in relation to the policy challenges? To what extent, how many places should be thinking about re-engineering their place, and then how do we overcome inertia in terms of people feeling comfortable with what they've got and not wanting to see too much change?
Yes, well, a number of points to make. I think the first is that if places, or the majority of places, are going to see a brighter future for their high streets, then they're going to have to do something about the fundamentals, particularly around jobs, in terms of getting those jobs in. That's going to cost a lot of money to do so. It's a long-term sustained effort. So definitely there needs to be government intervention on that. And that's why we think the City Centres Productivity Fund is a good idea, because it provides that upfront capital in order to do that. Don't think it's just government, but there will certainly need to be a kickstarter from government to get this process started. The second element of that is how realistic do we think it is then to be able to get the jobs into the centre? If we're talking about big places in particular, where you're able to offer businesses access to lots of density and access to lots of workers, access to loads of different companies that they might want to co-locate with, then imagine that is going to be much easier than in much smaller places. And there is a question about how reasonable it is to be able to get those sorts of jobs into smaller areas. If we can do that, that is good news for the high street. But if we can't, that does pose questions about what that means for the policy intervention. In terms of persuading people, I think it comes down to the data that exists. We've got loads of data on this to show that those places that haven't been able to attract in office jobs and actually have quite a large amount of their floor space given over to retail are pretty vulnerable in terms of not only what's happened in the last 10 years, but probably what's going to happen in the next 10 years, which has been accelerated by the trends that we're seeing currently. So if we don't see the constant adaptation of the high street, a constant adaptation in terms of getting more jobs in, but also an adaptation away from probably more traditional retail type uses through to more leisure type activities, which we have seen strong city centres already going through, then that means that it's going to be a struggle. And that's just the case for economies generally. If economies aren't constantly adapting to the winds of change, then they're in trouble. And we've seen that again sort of through the 20th century into the 21st. It's exactly the same for city centres, exactly the same for high streets.
Thank you very much indeed, Paul. We're going to be jumping around because I'm kind of looking at questions as they're coming in. So I apologise that we'll kind of jump backwards and forwards in terms of different issues. That's just the inevitable nature of the format and responding to the questions we're getting. Lahari, we've had several questions. Just can you say a little bit more about the recovery tracker that people are interested in? Give a bit more detail about what it is, and particularly how frequently we might be introducing that, when we will start, and how often we'll be doing it. Several people have asked that, so if you can do that, and then I'm going to go on to kind of several other questions. So just take those now.
Yeah, sure. In terms of timings, it's something that we're looking to launch in the beginning of June. is going to run from June until the end of the year, and we're going to look at recovery in terms of people's behaviours. So when I say people, we're looking at workers. So how many workers in different cities and how many workers across different cities are going back into the city centre for their jobs. So how is footfall recovering in terms of workers? We're going to look at it in the perspective of leisure as well. So the easiest way to isolate that is trying to understand what people are doing with their weekends. So are people feeling confident enough to go back to the city centres when they have no reason to do so, or they're not forced to do so? So we'll be looking at what the behaviour is on Saturdays and Sundays and how that varies across cities, and whether people are going to their usual neighbourhood or whether they're going to other cities and things like that. And then we're also going to look at how nighttime behaviour may have changed from before. So are people going into is daytime behavior switching a lot quicker, or are people not going into the city centre during the day, but they're going out for meals, going out to bars, and going on nights out? So it covers various different elements, but capturing both the leisure and the economic office job and worker element of a city centre across the country.
Excellent. Okay, thank you very much indeed, Lahari. So Paul, I'm going to come to you. You can kick us off. But loads of questions on the future of the office. And so I'm just pre-warning you now that there's been loads on the assumptions that, the office is still a thing, that working from home is not going to fundamentally, revolutionize the way that we all work, etc., etc. But Harry, if you're on the line, Harry, can you just unmute and ask your question in relation to I think dematerialization of the office was what you said. But Harry, if you're there, ask your question.
Hi, Andrew. I hope you can hear me. Hi, Lahari. Hi, Paul. Thanks very much for the presentations. I think this is excellent. So, the question is, as offices have effectively dematerialized, do you think this will promote a change in residential location choices by office workers? And the second part of the question is, what factors might inhibit this potential trend? Thanks.
Excellent, Harry. And so, as I said, that is a one of many questions we've had in about does this really change the fundamentals? Are offices coming back? Does it make locational decisions more variable given the nature of what we've seen in the past? Paul, away you go.
Yeah, great questions, and that is the debate of the day, isn't it? For those people who say that work from home is going to see massive increases, have definitely not had the same work from home experience that I've had, and I certainly can't wait to get back to the office personally. But there we are, we mustn't take anecdote as being fact. The reason why we don't think, or the reason why we think that there will be a return to offices is because there's a real benefit of having face-to-face interaction. And again, I'm sure everybody on this call has experienced that in the last few weeks. You're trying to have calls via Zoom, whatever technology you're using is very stunted. It's very difficult to get that spontaneous interaction that you get when you're in an office with other people, other colleagues, and coming up with ideas, as you sort of spark different things off each other. And indeed, if we look at the types of jobs that are most able to be done from home, and not necessarily tied to any location, over the last 20 years, it's exactly those jobs that could be done anywhere that have concentrated within our city centres. That's despite the costs of the office space, that's despite the costs of congestion and pollution and things like that. So while I think there'll be some firms that maybe decide to take a different option and go, well, maybe we can work remotely, and we've tried the technology and we feel a bit more confident with it. At the same time, we've run this experiment for the last 20 years. The biggest thing, and seeing that businesses have actually located in the centre, I think the biggest thing for me is it's interesting to say Barclays have made some noises around this. Twitter in the last day or so said they weren't going to return back to their downtown location, they're going to make it an option that people can work from home if they want to. I think the reality is let's say that actually plays out, and how many people at Twitter will decide to work remotely forever, or actually will still want that social interaction of going into the office. And what's interesting is that Yahoo in particular ran this experiment a few years ago. So one of the most advanced telecommunications companies in the world, they trialled home working. They actually banned it, because they decided that having people in the office was much more important, from a productivity point of view, from an ideas point of view, than it was having people spread out across different locations. So we think that the enduring nature of cities or city centres in terms of what they offer businesses that other places don't, is this face-to-face interaction with colleagues within an office, but crucially between different companies as well, will continue to exist after this crisis in the way that it did, in all the crises we've had over millennia that cities have existed for. And then from a residential perspective, I think that means that residential choices potentially don't change very much. However, if I'm wrong, and companies do start to move out of the city centre, then we probably see some sort of domino effect in that we've seen where cities have got very strong office markets and jobs moving in, residents have followed in after as well. So if you look at the centre of Manchester and the centre of Leeds, huge increases and Birmingham too, huge increases in their city centre residential populations off the back of their strong office growth. That's not been the case in places like, say, Barnsley, where that city centre has really struggled from an economy perspective. Then people haven't moved in because the jobs aren't there, so there isn't really an advantage of living in the centre in the way that there is in Manchester. But if those jobs start to move out of Manchester, it might be that people would start to move out as well. That's a double whammy for the high street. However, we don't think that's going to happen. We would expect that while we'll not return exactly to the levels where we were before, potentially, definitely the enduring element of face-to-face interaction will mean that there'll be this gravity pulling workers and people into the centre.
Okay, excellent. Thank you very much. Indeed, judging by the number of questions in relation to working from home and the changes will ensue, I think we've got a convincing job to make, or a job convincing people that some of these changes may not be as dramatic, or at least as long run as we currently feel they are, which is all good things for us to think about. The other point I would make, to several questions I can see coming up. And this is a shameless plug for our work. Several of the issues that you are raising about more analysis that we've done in relation to something that Lahari's been laying out today, a lot of that material, all of our material on high streets, city centres and how they're performing, how they relate to a bunch of other things, is all available on our website. So if this has piqued your interest, you can go to our website, search by city centres, high streets, and you'll find a whole wealth of information, analysis, commentary, policy, conversations about the sort of things that we are coming up with. But I do want to come back to this question. Anita Kasu is going to ask a question. Lahari, I'm going to come to you. I think she's interested in this point about the trends. Do we see the trends carrying on, whether they're good or bad, or do we see some of those trends being disrupted and varied? But Anita, if you're on the call, unmute and ask your question.
Thank you. Yeah, you kind of talked about how you sort of see the post. Once we're back out of lockdown, you've talked about how you sort of see that playing out. I wondered if you saw any variation in that. I guess it's the medium to long term transition. Any variation between a pre-vaccination and versus once there is a vaccination and it's readily available. And also I had a question that may be related to that, which is do you see any difference in terms of your view of cities with predominantly younger populations versus cities with predominantly older populations?
Okay, good questions, Lahari. So I'll come to you, and I think just pick up this. What interestingly, the point you made is some of our stronger city centres have actually seen fall off more rapidly. So that might skew our kind of analysis in the short term, but it's the medium, longer term we ought to think about as well. But you go for it.
Yeah, sure. I mean, as Andrew already touched on, I think the stronger city centres, yes, they've seen more of an interruption, and I think especially because some of those city centres like London are places that are much more reliant on public transport. So while we adjust to this period in terms of trying to understand how we make public transport work, how we get people back into the city centre, and how we do it most importantly in a safe way and a way that people also feel safe, I think that's going to determine most likely the length of the adjustment. And the vaccination point is interesting as well, and it's not something I've thought about, but I guess the vaccination is a part of making people safe, people feel and actually be safe. So I guess however long we might take for how long a vaccine might take, and I'm not going to go into it because I'm not a public health expert, but that is likely to affect how long people stay away from the city centre. But as again, it's a debate that we're having at the same time, but as long as the enduring appeal of officers stays, strong city centres, the footfall should bounce back. Where we might see disparity within that cohort is if there's a particular industry that the strong city centre services, like if, again, if there's a strong concentration of aviation or aviation related jobs in a certain city centre, they might see a stronger decline and they might not see the bounce back in the same way other strong city centres would. But otherwise, we would expect that trend to continue in a similar way. And I guess coming to the age of the population question, we've not seen any variation in terms of the city centres so far. So it's the strongest factor has been the nature and the quantity of the office jobs. And I guess it might play out across different cities, and we might see younger cities going back to normal in the future, but it's not been a factor that's come across so far. But I guess age has not been as relevant a factor as it is now because of the health situation.
Brilliant. Okay, thank you very much, Lahari. We by far and away we have again loads and loads of questions, which is amazing. And I apologise now because there's no way on earth we're going to get through all of these unless we run this session for essentially the rest of the day and probably into tomorrow. So I apologise now, but that doesn't mean that if you haven't posted one, you're not going to get it, because I'm not necessarily taking first come, first serve. So I apologise for that again. Anyway, Simon Matthews, you're next. You've posted several. You can't get to ask all of them, Simon, I'm afraid, because there are too many. All of them are good. But can you focus on I think it was your first question around High Street's fund and the implications for it. So Simon, unmute, away you go.
Hi there, yes, Simon Matthews here. I'm a consultant working across southeast of England, and also I'm a one public estate manager for Berkshire. A lot of work was done on the Future High Street Fund. A lot of bids were put in, very good bids, which unfortunately many were rejected by government just because of the funding. Do you think there's an opportunity now to brush off some of those? I know they are reflecting a time before COVID, but a lot of the good work that was done on them, and we worked on a number of them, some successful and some not. Is this a good time for government to look at these now and start bringing forward some funding to ramp up a new scheme post-COVID, so we can sort of start looking at that? The work's been done, the groundwork has been done, the partners have been identified. This could give us a really quick start into recovery in our high streets.
Cool. Okay. Paul, I'll come to you on that. Great background, by the way, Simon. The future of the High Street Fund implications, should it be expanded? Your thoughts on that?
Great question and great background. Thanks very much. So in principle, yes, but I think what I would probably, or the lens I would want government to apply to whatever plans get submitted is, how are they going to make the city centre a more attractive place to do business? So if that intervention is only focused on just, say, retail or just on leisure, but there's a more fundamental problem that there aren't people walking past the door, it doesn't really matter how much you spend on that individual intervention if you're just not getting people walking past the door full stop. And that's what we need to focus on. So as long as those ideas can meet that criteria, then I think government should be trying to fund those sorts of things through the City Centre Productivity Fund. But it's all about the local authority or local partners being able to lay out, I think, a very clear plan about what it is that they want to be doing over a number of years to say, right, phase one, we're going to do X and we're going to use the City Centre Productivity Fund to do that. Then hopefully once phase one's complete, we move on to phase two. We're going to aim to get the monies from X, Y, and Z, and we want to do this. And then we move on to phase three. Because clearly you're not going to be able to do all of these things in one big intervention. There've got to be a number of things that are in place first before other things start to have an effect. But it's about laying out that very clear and rational plan about what it is that they want to do. I think the other thing to probably say around the Future High Streets Fund is that it's taken quite some time for that fund actually to get the place where it is currently to then before. I don't think it's even started giving money out, if I'm right. And that's quite a bureaucratic process. And I think what we will be seeing, post-COVID is that we have to be quite quick in terms of our responses. So it's about local authorities having very clear and credible plans about what it is that they should be doing, which can be scrutinised by government, of which those ideas may have been developed before. And I would hope that actually some of those ideas had been developed before, because the challenge of the high street is not a new thing. But the government then gives the money to them based on the quality of that plan, and then local authorities and other partners are able to crack on.
Excellent. Okay, very good. let's move on. We've had several questions in relation to the property aspects that we've been touching on. We've also had several questions in relation to the residential component of city centres, which we haven't touched on as much today, although we've done a lot of work on that. So you might want to bring that into your thinking in response to this question as well, Lahari. But Melanie Allen, Melanie, if you're there, can you ask your question, which relates to this residential office question, particularly permitted development rights, which we've also done work on recently, looking at that. But Melanie, if you're there.
Yeah, hi. In our area, I'm from Wokingham, but in the whole region, we've seen a massive shift since the 2013 rules were brought in about permissible development rights to convert office to residential.
Mm-hmm.
I mean, hearing the importance of office space on footfall, I mean, is there anything that can be done to counter this? Because it's a continuing issue where we are.
Lahari.
Yeah, of course. So this is something that we've looked at and done some analysis on before. And what we've seen is that, yes, the conversion for the permitted development right conversion from commercial to other uses has been, it's a step in the right direction in terms of how the regulatory framework works, but it needs to have some sort of exemption for city centres, we'd say, because they're valuable assets, not just in terms of the property and the property value, but they're valuable assets for the local authority to foster and the city to build a good economy around. So we would actually argue for an exemption for city centres in terms of PDR, so that the offer can be curated a little bit more in these places.
Yep. Excellent. Yeah, and again, you can get more detail on that particular point and our thinking on that in relation to PDR on our website. We've done a particular piece of work focused on that. I want to move to some property questions. Simon from the Leicester bid, you've got a couple of questions in relation to property supply. If you can unmute and ask your questions, and Paul, you can have first stabs on that. Simon.
Yeah, thanks, Andrew. So in Leicester, we're sort of broadly in agreement with your overall analysis about the importance of people living and working in our place. But we've seen an increase in sort of profile and demand for office space. And we've had a number of relocations, people like IBM, wealth management firm called Materially Woods, Octopus Energy, PPLP, PRS, who do music licensing for the UK. So we've had a good trend on that. But we've run into a situation where people are contacting the local authority because they want to be in our place, but we've run short in terms of supply. So I was interested in the property fund, but what can we do more on the supply side? And the other thing, just a very brief one, was on the return to work. I'm talking to a lot of professional services organisations where they're going to have substantial time lags. So they anticipate being back in the city, but perhaps at 50% capacity, 60%, 40%. And so I'm quite concerned that will have an impact on our economy, and maybe that's something to look at in your tracker. But the main question is around supply side of commercial office space.
Brilliant. Thank you very much, Simon. And the second point is a fundamental one, isn't it? Which is a sense this is not like it's suddenly going to change and everything will be back to normal. There will be a long trend back to whatever normality looks like, and in different places, the length of that, the shape of that is going to be quite different. So monitoring and keeping an eye on that is just important from an analytical point of view, but certainly from a policy point of view. Paul, we've been doing some thinking around that. Just say a little bit more about the supply question, and just so you know, Pat Stewart, I'm going to come to you after Paul's response to get your question about councils and their role in the property sphere. So, Paul.
Yeah, just briefly on the time lags. I mean, yes, there is going to be a time lag. This ties back to Anita's question about pre and post vaccine. You know, pre-vaccine, there's a question mark about how quickly are people going to come back. How many tables can you cover in a restaurant, for example, you know, while we've still got social distancing in place. And that probably points to, you know, sustained government support to make sure that business can take over while their cash flow is an issue. It's definitely going to have an impact on the local service, on the high street, as you say, Simon, and if you're not seeing the office workers return back as quickly as what we may like. But our recovery tracker will definitely be looking at these sorts of things. So please do keep your eyes on our website, and we will show how that is playing out pretty much in real time, which is very exciting from a data perspective. if not sort of in the context of the situation we find ourselves in. In terms of supply of office space, yes, definitely we think that that should be the core element of what any submission to the City Centre Productivity Fund should be able to demonstrate is what is the nature of the office space that we have currently, both in terms of its floor plate size, but also its age. So that's then telling you something about the appropriateness of the office space that is there currently, which then sets out where gaps in the market might be, where you might want to start addressing that. Clearly, local authorities are can maybe do some of that on their own, but that's a timely process and a long-term process in terms of doing it. We want the government to step in and help with that, and it's that supply of office space or lack of certain types of office space that the City Centre Productivity Fund should principally be focusing on.
Excellent. Okay, let's bring in Pat Stewart. Pat's question is mirrored in several other questions, which is, what is it that the local authorities can be doing in the absence of strong market forces, either to change from one use to the next, or actually, more particularly, to remove blight in some of our urban areas, because they're preventing further rounds of investment. And unless they're tackled, then the market will unlikely resolve them themselves. So, Pat, if you're there, can you ask your question, Pat?
Yeah, thank you very much, Andrew. I think you're pointing to, I've asked two questions. I think you're pointing towards the second of those two. And my experience at Town Centre Regeneration is it's really important for the public sector councils leading the way in terms of assets and grabbing assets when they can. Land assembly really would be the right phrase. So my question is around, would it be sensible for government to further reduce borrowing rates for councils to land assemble in town centres? Councils tend to know their patches extremely well and will be able to identify those properties that are needed. They're talking to investors who are telling them what sort of floor space might be required, what sort of assets should be procured, and so on. So rather than set up a government property fund for the government to step in and buy those properties, I just wonder whether it would be more sensible for the government to say, yes, there will be a sort of property fund, but that is in fact a reduction on public sector borrowing rates to allow councils to grab assets when they can, land assemble, and be able to offer up something much better to investors than is currently the case.
Yeah, excellent. That's a great question, and there's lots in the role of the local, the role of the state, the role of local versus national. Paul, you pick up that first, and then I'll come to Lahari.
Yeah, very, very interesting point. I don't think local authorities, any sort of government action could necessarily preclude local authorities doing that sort of thing. And indeed, I know that some local authorities have been doing that for some time, but have also run up against massive barriers in terms of trying to deal with landlords too. I think the advantage of potentially setting up a government fund would be that would be national government be able to have conversations with banks in order to then move in and take on property that is being foreclosed, and then sort of do something with it, as opposed to which would then be given in the hands of local authorities themselves, rather than the process of probably individual local authorities trying to have conversations with banks or not, etc. And the government's got a much bigger sort of bargaining lever, I would say, in terms of trying to get this property. But also, I think it sets out a market too in terms of national government is doing this, something that then is very clear and broadcast to the sort of financial sector and the property sector, where clearly, a local authority trying to talk to investors that are in the Cayman Islands or wherever it may be is a much more difficult task. So it feels that the national government has certain benefits to it that would help potentially speed up some of this process in the way that local authorities can't necessarily do that.
Lahari, your thoughts on additional, and just in terms of the those kind of questions, and particularly the role of the local authority as being the galvanizer, almost the bringing together of the different actors, because several questions about how do we deal with absent landlords or reluctant landlords. So just something on that.
I think we've seen a few examples of this happening in other places already. So it's a case of demonstrating to the market that there is demand in these places for commercial space and for high quality commercial space. that can be taken up. So where we've seen this happen is in Warrington. They've taken steps to build up new office space, and they actually let it out a lot quicker than they thought they were going to local businesses, and it's been expanded on as well. So Bradford have done similar things, and I think Bristol have done similar things as well. But these are all part of work that we've done already, and they're written up in nice case studies. So maybe we send it out as a follow-up for this call as well.
Yeah, again, you can find examples and broader analysis on those kind of issues. And as Lahari said, the examples tell us something about understanding whether you're working with the grain or essentially against it, often starting small and in incremental ways, almost proving the point, proving the concept, and then trying to draw further rounds of investment in. I think that's kind of really interesting perspectives to bring. I want to turn to, we've got 5 minutes. I want to turn to NJ Rosland. If NJ Rosland is still on the call, they had a question about the role for mayors in all of this, which we haven't touched on yet, but maybe we should. So NJ Rosland, if you're there, can you unmute and ask your question?
Yeah, hi there. I'm having just come back to London from spending a few years up in the Midlands, specifically Birmingham and Sandwell. I've noticed that Andy Street has played an increasingly hands-on role with trying to save the high street effectively. And I'm just wondering, how much research have you been doing in terms of actually looking beyond just the local authority level to the sort of wider regional framework and beyond?
Brilliant, thank you very much. Lahari, do you want to say something about mayors particularly, but that kind of broader city region leadership, and then I'll get Paul to conclude with some final thoughts.
Yeah, sure. So this is something that we've thought about in terms of a devolution perspective. We actually had a session on it last week, but I think whether this goes to what we would advocate for is that analysis and planning is done on a city region level. So not necessarily local authorities. In some places, the city falls within a local authority, but in a lot of cases, it spills over. So we'd advocate for doing the analysis and also the planning at that level, because that's when you can identify where people are commuting from, where people who's actually coming in and who's using these spaces a lot better, and curate that offer a lot in a lot more functional way.
Yeah, and I mean, Lahari's point there, I think, is important. Part of the work that we're doing, both through the high streets lens, but also some work actually Lahari's leading on as well, thinking about some of those smaller towns, which we've had some questions on, some of those that are on the periphery of urban areas, or indeed, well beyond some of our urban areas on the coast and in deep rural areas, is trying to figure out and think about what it is that they ought to be doing in the context of their own place, how their own place is performing. So we've done some work in that area. We've got more work that we're currently undertaking in that area as well. We'll have more to say, and Lahari will have more to say in particular on those kind of questions, trying to understand the relationship between different places within city regions, and indeed those places that are outside of city regions where they can't actually borrow from those city regions if you use it in that way. So Paul, your kind of final thoughts on that leadership question more generally, and then we'll bring it to a close.
Well, places that have got mayors in place, should be using the benefit of that office to as much as they possibly can. I think the challenge for the mayors is to being able to communicate the problems that the local area is facing to national government, making the case for getting investment in. But then the mayor himself has to also then take or prioritise about where that investment is going to go. And I think what we would then be saying is that from the performance of the economy perspective, needs to understand that the city centre plays a very different role to potentially the suburbs or outlying towns within the area that they cover, and that there's implications for not only the volume of investment that goes in, but also the type of investment too. So from a high street perspective, it's not necessarily a case of that we're going to sort of spread money across the whole of the city region that the mayor covers, but actually having to be a bit selective about where's the investment going to go in to make sure that we're getting the maximum impact for the economy, but also maximum impact in terms of the knock-on impact on the high street as well. So there's an element of advocacy to central governments that places with mayors can benefit from, that other places that don't have mayors obviously can't. There's also strategic decisions that need to be taken, that if we are or do have a person that sits over that broader geography, is then able to make strategic choice across that geography about the roles that different parts of that area plays. And they've got to be selective about investment going into which part of their city region, in the same way that government is going to have to be selective about how it applies or where it puts investment across the country in terms of its national plan as well.
Excellent. Thank you very much indeed, Paul. So it's 12 o'clock. We could go on, but we can't. As I've said already, lots of the details about our high streets and our city centres work can be found on our website. So that's the first thing. The second thing to say, we've had several questions in relation to the relationship between place, high streets, city centres and transport. For those that have posed those questions, apologies we didn't get to them today, but next Thursday, 21st of May, at precisely the same time, precisely the same location, 11 o'clock on Zoom, we'll be having an event looking at the future of urban transport. So those kind of questions about what that means for our cities and for our urban areas more generally, and how transport is responding or will need to respond, come back next Thursday at 11 o'clock, and we'll be exploring those questions and issues. And finally, particularly from colleagues from local authorities who are on the call or on the event, if there are more issues that you think we should explore, or you think it would be useful for us to consider and do more work around or host more events about, if you can email us or contact us to put those ideas forward, if you have a moment, that would be enormously helpful. We're very keen to do the things and to do activities that are useful and relevant to the things that you're grappling with on a daily basis. So if there are things that we could be useful with, let us know. But without further ado, that's the end of the session. Thank you all for joining. Stay safe and go well. Thank you very much indeed.